I'm going to be the final speaker, and I will pull the hook on myself just like I did everybody else. So what do you know about flood insurance? Go to the next slide. I'm going to fly through this, but consumer and real estate education is our number one goal, and that's why we're here today, is to make sure you're educated about the current information, like we had, Frank Evangelisti, Mayor David, and some of the lender requirements that Jacques shared have changed. Fred gave you some good court cases. Ed talked about elevation certificates and LOMAs. We want to give you up-to-the-minute news. I think it's good news about the delay in the flood maps from the standpoint that there's some work going on, hopefully that will certify the levees, and hopefully will reverse some of the preliminary flood mapping that we've seen. I want to talk a little bit about flood insurance claim settlement, talk about our services for real estate agents. I'll talk a little bit about the future of NFIP. I think you heard Jacques share a little bit about that. There are some alternatives coming out now, and I'll give you some of the reasons why that's happening. And then the other thing we're going to drop off at brokerages, we're going to drop off some of these buyer packets we prepared that have sample rates in them as well. We'll give a number of these to each brokerage. When you run out, we'll give you more. But anyway, flip to the next slide, please. So a little basic information about flooding. 1 inch of water in a home could cost $25,000. And I'm sure you've seen numbers that go way above that. You're 25% more likely to experience a flood versus a fire in a home. All 50 states and 98% of counties have experienced a flood. Now keep in mind, what we heard Frank share is a flash flood constitutes a flood. Vestal Center, you've had flooding there, flash flood, and all of a sudden what are normally dry creek beds turn into raging rivers, and a tree falls in it, diverts the water, and the next thing you know, homes are filling up with water. 20% of NFIP claims are in low to moderate flood zones, meaning in areas that don't require flood insurance. That's 20% of their claims. 50% plus of claims from Harvey were in low to moderate flood zones. So the rule of, if I'm not in a flood zone, I'm not going to get flooded is not a good rule to live by. The average flood insurance payment on a flood insurance claim is $30,000. That's an average. That tells you there's some a lot higher and some a lot lower. So a few acronyms, because how many of you use the Broome GIS again? I saw a lot of hands go up. Great. Hopefully all the hands will go up because, again, I want to reiterate the offer for us to train you if you need training on how to use it, because it's a great resource for you. So you'll see some terms on that Broome GIS. SFHA, Special Flood Hazard Area. That basically means it's a flood zone, right? SFHA. You'll also see NSFHA, which means non-special flood hazard area, which means it's not in a flood zone. Okay? So I wanted to make sure you grasp those, because I was doing a presentation at a brokerage about this, and that term, we used the Broome GIS, and that was up there, and I asked anybody if they knew what it was, and nobody did. So I want to make sure you know. It's important to know what that is. All right, go to the next one, please. All right, so here's the good news about the rate map delay. 7,000 property owners, March 25th of 2010. I still have an original copy of the letter one of my policyholders brought in. 7,000 property owners received letters from FEMA saying your home is going to be mapped into a flood zone. So there's good news about that delay, because flood insurance is not mandatory. They're not being required by their lender. I think Dale mentioned an exceptional case where, because a property flooded, even though it's not in a flood zone, the lender's requiring it, which is within their rights to do. But that means all of those properties are eligible for preferred risk rates on flood insurance if they choose to get it, because they say, well, it flooded in 06 or it flooded in 11, I might as well get it. And you all have preferred risk rates in your handout, I think, right? Yes? Okay, good. So how do we handle claims? And I want to say about how we in our office handle claims. So in 2011, when the rivers had crested, before anybody got to the office, I told everybody stay home the day the rivers crested. The next day, I expect everybody to be in the office. And I had, by the time they got in, I had distributed an alphabetical list of policyholders to team members. Before the end of the day, we had contacted all our policyholders to file claims for them. They didn't call us, we called them. So after that was my relentless pursuit of NFIP claims adjusters. We created an Excel spreadsheet, every single person on there. Did the adjuster get there, yes or no? Did the claim get processed, yes or no? Did they get paid, yes or no? And I still get Christmas cards from the presidents of the claims adjusting companies. I have their cell phones. But the way this works is FEMA doesn't settle the claims. FEMA hires a third-party company who then that third-party company hires third-party adjusters. They were coming from all over the country. That one that Jacques shared about the lady who closed on her property 3 days later the flood happened, I went there with the adjuster who came from Alabama. I went on the claim, helped them measure the claim, helped them, adjust the claim. We're relentless about making sure people get paid. Our policyholders receive payment fast. So how many of you know the humble, lovable Shoeshine Boys? Anybody remember that? Underdog, right. So it's an interesting thing because I'm not the humble, lovable Shoeshine Boy, but I did have a business where I was the largest importer of shoe polish in the United States as a broker and bringing it in from Honduras. A long story if you ever want to talk about it someday I'll tell you. It was a part-time business. But so when like Underdog from humble, lovable Shoeshine Boy turned into, the guy who was Underdog, right? I'm kind of like that because here's what I turn into for claims on the next slide. Right. So the pit bull with a bow tie. So that's what the adjusters, I had my ears pinned back, just for that shot.
So that means you will insure houses with pit bulls?
Yeah, we're not, and that's a good thing. We don't, State Farm doesn't discriminate against breeds. We'll insure a home with any breed of dog, right? Because I am one. So, all right, so let's go to the next one. So what are some of the services that we offer to you as real estate agents? We'll do a format. We'll actually send you a PDF of the FEMA rate map, which is not what's on Broome GIS. We're going to send you a PDF of the flood insurance rate map from the FEMA database that shows you where it is. We'll do, I call this a preliminary review for a LOMA. We're going to look at a property and say, you know what, it looks like the structure might be out, but the parcel's in, the bank says they want flood insurance. Let's get Ed out there and go look at it and see, if the seller's willing to do that, because we think it might be a potential candidate for a LOMA, right? Because our goal is if we can help them get it out of the flood zone, we want to do that. We'll do rate quotes and premium saving ideas like, what's the deductible? How much coverage do you want on contents? How much do you want on the structure? If they're required to buy flood insurance, we want to get them the lowest rate possible. And then we'll help them with a risk assessment to talk about, what risk they're facing. Go ahead. This is an example of a format. You've seen this through several presentations, but we can actually look at a particular property and send you this PDF, which you can then forward on to either your seller or your buyer. Go ahead. So what's happening with the future of NFIP in the private market? So somebody was talking earlier, I can't remember if it was Jacques, talked about how the government has removed subsidies. You know, the government was subsidizing the National Flood Insurance Program for years. Now with the Bigger Waters Act that passed in 2012, their subsidies are being removed. So premiums on properties in flood zones are going up 18 to 25% a year, right? So, so what does that do? So premiums going up, hopefully to market levels, means that the government is stepping out of the way, and to some degree, and there's no subsidies, which means hopefully private carriers can come in and start to get engaged. Very limited number of private carriers have come in, right, so far. But lenders are approving private flood insurance carriers, okay? So we don't know the flood claims paying experience of these companies. It's largely untested. Limited rate stability track record. In other words, if you have claims, will your rates go up, right? And post-claims retention, will they drop you? We have a nice way to say it in the insurance business. We call it non-renewal, right? It's you're being non-renewed. Well, you mean I'm being dropped? Yeah, that's another way to say it. So what about their retention? So we don't know that, right? But I mean, I'm very much a free market guy, right? But I'm selling government insurance, which is sort of, you know, hypocritical on my part, but that's the only place to get it. But I think long-term, that's, you know, hopefully the private market is going to step up to the plate and step in. I've asked State Farm about that. I don't have an answer yet, but my expectation based on their, let's say, lack of an appetite for coastal exposures, I don't expect that that's going to happen. Next one. All right, so here's the rates that you have. I want to make sure you clearly understand something about this. Owner-occupied rates and non-owner-occupied rates are different. That wasn't always the case, but it is now, okay? And, you know, one great way to manage the cost with any insurance is deductibles. The higher your deductible, the lower the premium. You retain more of the risk. I would encourage you to do that on your own personal insurance. Go for a higher deductible, pay a lower premium, and you know, in the long run, you'll be ahead of the game. Go ahead. All right, thank you to everyone for attending. And there's one more slide at the end. And so any questions, anybody? Sandy?
It's not a question, but all of you should talk to Jim about the umbrella. I paid like, what do I pay?
Oh,
$5 to protect me.
Right. So each of you, so what you're referring to is your own business policy, meaning each of you as independent business people are, for general liability, you can get a policy for $327 a year, gives you $1 million of general liability. That's, if you want to talk about that, John Sarah shared a story about that, about a lawsuit that's happening right now with a trip and fall at a showing. Still, it's a New York State lawsuit that's still underway where everybody, the homeowner, the realtor, the showing agent, the listing agent, they're all being sued by the person who got injured. I think Fred said it was our American pastime. Used to be baseball, now it's lawsuits. Anybody else? Any other questions? Yes.
I understand about the flood insurance premiums through the government, but these that you refer to, the preferred risk policies.
Those are from the government. Those are NFIP policies.
Not from a private insurer.
Correct. Jacques?
So if you do the LOMA, that basically puts you into a preferred risk if you choose to get optional flood insurance.
Correct. That's right. Yep. So if you do a LOMA and the property is removed from the SFHA, what does SFHA mean? Special Flood Hazard Area. If it gets removed from the Special Flood Hazard Area, you can still buy flood insurance. You're not mandated to buy flood insurance, but you'll get those preferred risk rates, which is, you know, very affordable relative to what it would be if you were in a flood zone. Chris?
So back to Jacques from earlier, though, the differences in the flood insurance
Well, or they put the wrong zone in. I mean, somebody could put the wrong zone in and say they could say it's out of a flood zone when it's really in a flood zone, and then give you one quote, and then when it comes to actually buy the property and buying the coverage, FEMA rejects the policy and says, no, you quoted it incorrectly. We did it, which leads me to one thing. We had one policy declined by FEMA. People were gonna go to closing, they had a closing date, we took premium payment, we submitted it was a house in Owego, we submitted it, and NFIP came back and rejected the application. They said, we don't know how it happened, but this house got built in a flood zone with a basement, which is not permitted. And the only way we will issue the policy is if you pump the basement full of concrete. And the owner of the house said, nah, I don't think so. So that deal didn't go through. Yes?
So, let's say somebody gets the preferred rate now.
Yeah?
And then in 5 years, they make it official that these people now are within the AE zone.
Right, so they buy a preferred risk policy today.
Do they lock in that rate?
They're eventually gonna get
Slammed?
slammed.
Okay.
Tony just was on a seminar about that today with FEMA for 2 hours. Tony, why don't you talk about that?
Yeah, so if you are in a preferred risk policy and then you are changed to an AE zone and you have to have flood insurance, the next year it will be at that preferred risk rate. And then it will go up incrementally by the 18% every year until it reaches the max. To the normal AE zone rate. So you will have a slow increase, it won't be $400 and then $1,800 the next year, but it will increase.
So, right, so the summary of that is you'll get slammed. All right, everybody, we have food and beverages out there. Thank you all for coming. Hope this was educational for you. Thanks.